From the studios of Farm Journal Broadcast, this is U.S. Farm Report.
Welcome to U.S. Farm Report. I'm Tyne Morgan, and here's what's in store over the next 60 minutes. Trump's tough stance on steel is making waves both in and outside of agriculture.
I think the smarter way to go is to make it more surgical and more targeted.
Plus, the TPP is moving forward, leaving the U.S. behind. Dryness is growing into a desperate situation in the plains.
In this part of Texas, it's been more than 100 days of no precipitation, so that's broken a record. That's an all-time record.
But how could that impact the growing cotton acre picture in 2018? That's our Farm Journal report. And in John's world,
steel tariffs and trade wars. What does it mean for the future?
U.S. Farm Report is brought to you by Chevy Silverado, the most dependable, longest-lasting full-size pickups on the road.
Now for the news. USDA releasing its March supply demand report this week. And while most of the industry is waiting for the March 29th prospective plantings report, there were some stats that are worth noting. USDA lowering its soybean export expectations due to higher shipments from Brazil. That caused USDA to raise its forecast of domestic soybean ending stocks to 555 million bushels. Now on the flip side, the report showing higher demand for the U.S. corn crop. The agency lowering the 17 to 18 corn ending stocks to just over 2.1 billion bushels. That's based on increased exports and ethanol production. Well, the U.S. Meat Export Federation also releasing its January numbers, and the bullish export story just continues. Following a record 2017, beef export volume in January rose 9% year over year. Values were up 21%. On the pork side, volumes were steady while export values gained 7%. Pork exports now accounting for a quarter of total pork production. Meanwhile, the ag industry worried about retaliation following the president's decision to move forward with tariffs on steel and aluminum imports. On Thursday, the president signed the orders to tax steel imports 25% and aluminum 10%. However, there are exemptions carved out for NAFTA partners Canada and Mexico. Now, he also suggested a break for Australia. But President Trump says there's flexibility to his plan, adding that all countries affected by the tariffs are invited to negotiate for exemptions if they can address the threat their exports pose to the U.S. The decision prompted the president's top economists to quit. And now many members of the GOP are pushing back and not supporting the president's move.
There is clearly abuse occurring. Clearly, there is overcapacity, dumping, and transshipping of steel and aluminum by some countries, particularly China. But I think the smarter way to go is to make it more surgical and more targeted.
Ag groups are hoping to avoid retaliatory tariffs on the industry following the president's pledge to implement across-the-board increases of 25% on steel and 10% on aluminum. Meanwhile, the newly renamed Trans-Pacific Partnership was officially signed in Chile Thursday. 11 nations minus the U.S. agreeing to the trade pact, making it one of the globe's 3 largest agreements covering 500 million people. The CPTPP still needs approval from each country's legislature to be fully ratified. Once implemented, the U.S. wheat industry says shipments to Japanese millers, one of the biggest customers, are likely to be cut in half simply because of the disadvantage in price. Also in trade news, the latest round of NAFTA negotiations wrapping up in Mexico City this week. U.S. Trade Representative Robert Lighthizer says 6 of 30 chapters have been completed. While progress is being made, Lighthizer stresses time is running short. Mexico has elections this summer, and the U.S. has its own midterm cycle in November. He stresses an agreement needs to happen soon. If not, the U.S. is prepared to seek a bilateral accord with both Canada and Mexico rather than a 3-member deal. Despite uncertainty, most farmers seem optimistic about trade. The monthly Purdue CME Ag Barometer asking farmers about NAFTA as well as trade. In the February survey, 87% of ag producers say they expect exports to either remain about the same or increase over the next 5 years.
So a lot of uncertainty about NAFTA. Despite that, farmers remain optimistic about trade growing over time. And that's despite the fact that Canada and Mexico are 2 of our largest ag trading partners.
The survey was conducted prior to President Trump's announcement on tariffs. As far as the overall sentiment, the barometer climbing higher for the second straight month. At 140, it's the second highest level in more than 2 years. And dozens of wildfires erupting in Kansas and Nebraska this week. More than 50 fires burned in Kansas alone, covering about 40 square miles. This footage on Twitter was captured near Hays, Kansas, by a highway patrol officer. Black Hawk helicopters were dispatched in several locations to drop water. And the dryness and fire danger includes parts of the Texas and Oklahoma panhandles, where places have gone more than 100 days without rainfall. Winter wheat fields are dry and blowing as the crop starts to break dormancy. Dryland cotton farmers planning to increase acres now say they'll have to see if the rain returns before planting.
As planting dates get nearer, that's going to really impact a lot of decisions that farmers are making as to what crops they might want to plant and what they might want to do. There is people that have irrigation. I've already seen some pre-watering start.
Earlback says pre-watering is expensive. The lack of moisture and threat of crop failure may mean producers turn to less expensive varieties this spring. All right, we need to take a quick break, but when we come back, it's a look at weather. Plus, later we'll dive into our marketing discussion from the road in North Dakota, where the analysts take over this week. Please stay with us.
Agriculture's national forecast is brought to you by Elevo Seed Treatment from Bayer.
Meteorologist Cindy Clausen is filling in for Mike Hoffman again this week. Cindy, I guess it's safe to say winter isn't quite over yet.
You got that right. And we'll talk about that in just a minute. But I wanted to start you off with the latest U.S. drought monitor, where it continues to be a tale of some folks getting better and some folks not. And the areas that are getting better in the southeast and where we're seeing very bad conditions continuing to develop is in the plains and in the Four Corners region. This is what it's looked like over the past month. You can see how widespread the drought was just 4 weeks ago, but watch the improvement in the eastern half of the country where we were seeing some extreme drought in Missouri. That's all just mainly abnormally dry to severe. Great improvements in the southeast, but we're really seeing that drought expanding in the western parts of the Plain States into the Four Corners region. We're now seeing exceptional drought in parts of northern Oklahoma. Let's take a look at that jet stream, and we've had some very cold weather in the northeast and just relentless snow, especially in the northeast United States. We continue to see a trough affecting there with colder temperatures continuing, while a ridge is affecting the western parts of the United States. That moves a little bit further to the east, while another trough moves into the west coast. Everything translates to the east. We'll finally see that ridge bringing us some warmer temperatures into the Corn Belt, even into the eastern Corn Belt by the latter part of the week. But that trough really digs into the west. So look for some more stormy conditions, more active weather as you start getting into the west and then eventually into the nation's midsection as that trough moves further to the east with that colder air into the Pacific Northwest. Looking at the week ahead, we're going to be a little on the cool side for parts of the Corn Belt, but for the most part dry to start off the week. We'll see the wet weather in the southeast, a little bit into especially the eastern Great Lakes. Might see a little bit of rain into the parts of the southwest Four Corners region, and another system is going to be coming on the west coast. Heading into Wednesday, still fairly on the dry side as you get into much of the nation's midsection into the south. The wetter weather, rain and snow from the Great Lakes on into the northeast. We'll see rain and upper elevation snow in parts of the northwest as well. And look at that, yet another system coming onshore to the northwest. Things get a lot more active, as I mentioned, as we get towards Friday. So we start to see a system moving across the nation's midsection. We'll see dry conditions in the east, but we'll watch for some rain and snow moving into the central part of the country. That's a look. Oh, let's take a look at your 30-day forecast, I should say. Below normal temperatures for much of the upper Midwest and into the Pacific Northwest, where it's going to be a little bit warmer down in Florida and into the southern plains and over towards the Four Corners region. Fairly normal everywhere else. As far as precipitation is concerned, we'll be on the wet side from the Gulf Coast states all the way up into parts of the northeast. Also on the wet side along the west coast as well, especially the Pacific Northwest. But unfortunately, the areas that are driest out there right now are going to continue to be dry over the next 30 days. That's a look at your national forecast. Now back to news.
Thanks, Cindy. Well, when we return, we're headed out to North Dakota for this week's market discussion from the CHS annual meeting and Ag Industry Day. I battled the flu earlier this week, so the analysts are actually taking over, and this you won't want to miss.
U.S. Farm Report on the road at the Ag Industry Day is brought to you by CHS Ag Services. Proud to serve you in 20 locations in Northeast North Dakota and Northwest Minnesota. Wishing you a safe and productive planting season.
Well, as many of you know, a flu season has been rough this year, and unfortunately, it did visit my house earlier this week. That kept me from traveling to the CHS annual meeting in Ag Industry Day in Grand Forks, North Dakota for our on-site roundtables. But luckily, we have some great guests like Tommy Grisafi willing to step in and take over. Tommy?
We're going to start the show with our two guests, Elaine Cubb and my friend Dwayne Bussey. And my new friend Elaine, they got a lot to tell you about this USDA crop report. Let's just get right into it.
This is interesting. We're taping this right as it comes out, so you're going to get our initial reaction. I'll just point out the one thing that jumped out to me was Argentina's soybean crop. Our USDA did drop it from 54 million metric ton last month to 47 million metric ton this month. That's more than I anticipated they were going to do, more than the trade anticipated they were going to do. Back in drought years of 2012, they only would dip it down about 2 million metric ton per month. USDA doesn't like to make big jumps, so a 7 million metric ton drop is a big drop.
And that's absolutely the number that the market was waiting for and was watching to see. And it was lower, as you mentioned, from your estimates, but also the analyst estimates in general. However, market reaction-wise, it wasn't huge. I think it bumped up, what, a few cents that we saw right at 11 o'clock when the report came out. Right. And it stands, we wait and see what will happen by the end of the day or by the end of the week. Going into this report, it sort of looked like the soybean chart was at an inflection point and was willing to start heading lower, which would make sense from a standpoint of the crush getting kind of away from ourselves, and bean oil and global edible oils in general not being able to support this kind of a rally in soybeans. So yes, the market was waiting for this bullish number from USDA. They got the bullish number from USDA, but I don't know if it's going to have a lasting ability to build the rally.
Well, and I can add in, I think I see some of the bearishness on the soybean market here. Soybean crush in the U.S. domestically was raised 10 million bushels. That's nice, but I think we're at maxing capacity, I think is the problem there. But exports were lowered again 35 million bushels. So that means the U.S. ending stocks, what we're going to have in the U.S., that is now projected at 555 million bushels. That's a lot of soybeans we're going to have on hand at the end of this year.
You know, it's my opinion, everyone was hoping for someone else to have a production problem. We're having it now. Yep. We got a live audience today. What can we leave this group with that's something that's actionable? Here's the report. Corn's up, beans unchanged. Corn's up a few pennies. What can this group do and leave and say, hey, I went and watched U.S. Farm Report. I'm going to leave with one good idea. What's that idea?
Like you mentioned, we keep on waiting for this bullish problem somewhere else in the world. We got it. We got it. I believe it's probably all the way through the market. Everyone has known about the Argentina production problems for weeks now, so it's been priced in, and probably your opportunities to sell are here. There's kind of nothing more we can do at this point bullishly from a fundamental standpoint.
Yeah, I'll piggyback right on that idea that, you know, going into this report, I was recommending to be about 50% hedged on new crop soybeans. Old crop soybeans, I missed out and sold them a little bit earlier, but that's fine. They were profitable. 4 months ago, we were just begging for a profit. And I think seeing this report, I think what Elaine says is, you know, it's old news a little bit. The Argentina drought, you know, there's rain in the forecast for next week. One of the GFS models had like 10 inches of rain coming. So the trade reaction, the close today will be very important for me, but I'm still saying you need to sell soybeans here.
Well, it's presenting a wonderful opportunity. It's funny, year after year, I notice that the farmer gets rid of their soybeans early. They rally, they hold their corn. What should they do with corn in the bin?
So the report was actually pretty bullish. We saw an increase in exports, an increase in ethanol, and we know that from the cattle on feed reports and just the poultry numbers that feed is probably expected to grow this year. So you could make a bullish case fundamentally for corn, but again, from a profitability standpoint, from a seasonality standpoint, I'm a bear. I'm bearish on new crop corn.
Yep. Hey, some of the corn numbers, they did raise ethanol demand 50 million bushels domestically here. Exports were raised 175 million bushels, which is impressive because we're behind the pace a little bit. So USDA is guessing that during the summer we're going to push out a lot of corn. And I'm bullish. That doesn't surprise me because we're the cheapest corn in the world right now, and world stocks are down sharply. Yes, we have a lot of corn here, but we're going to ship it out here.
We have 1 minute left. Anyone want to talk about spring wheat? We have a room full of spring wheat growers. Let's do it.
Yeah, absolutely. So the stocks-to-use ratio for spring wheat, for durum wheat, for white wheat, for those milling wheat varieties, if you drill into the supply and demand tables, those stocks-to-use ratios are like 34%, compared to the more general feed wheat variety, which the stocks-to-use ratio is a abysmal 76%, something like that. So there is sort of two wheat markets going on, and I think as the growing season goes on, if the drought persists all across of North America's wheat growing regions, all the way up into the Canadian prairies, I think there's a possibility for spring wheat to pull away, but it really depends on the weather here in the northern plains in the next few weeks.
And how many acres we plant.
It's already time for a break. Stick with us. We're going to take a little break and come back to more U.S. Farm Report.
Well, the tariffs on steel and aluminum could be far-reaching. Here's John Phipps.
It would almost be irresponsible of me, I think, to not talk about the trade war. It has been the topic for the last few days. But while I think the actions taken by President Trump are economically unjustified and, frankly, counterproductive, I think it's really hard to predict the consequences both here and abroad. One reason is the infamous bathtub theory. This metaphor was developed, I think, during the 80s to help explain the trade effects of oil. It goes like this. Instead of thinking of oil as something Saudi Arabia, for instance, sells and the U.S. buys, it is more helpful to think of all the oil producers pumping their oil into a big bathtub representing the global market. Meanwhile, oil users drain from that same bathtub. Since oil is oil for the most part, any change in trade between one producer and one user simply diverts the flows to and from the bathtub. This is especially true where there is a good supply. Steel, the center of the current trade fight, is also a commodity. In fact, low-cost, no-frills steel produced by China is no different from Canadian or Japanese crude steel, which is what it's called. With China capable of flooding the bathtub with their 50% of production, of global production, bilateral trade frictions like tariffs are pretty easy to get around. You just order from somebody else. The only effective tariff then is a complete tariff on all non-U.S. suppliers, which at the time I'm taping is what President Trump intends. But the bathtub of steel is still out there. Raising our steel tariffs means other users probably got a price cut because there's more supply. This makes the cost to steel users in the U.S. even more painful. Our faucet, which is only about 10% of global trade, simply isn't big enough to really change the tub level, even if we shut it completely off. Global trade in commodities like steel is hard for any one country to control because the product is identical. In the last few years, trade around the world has accelerated between more countries than ever. Not even the U.S. can really slow this down anymore. It can only shift the flows. In fact, as more protectionism is used by the U.S., those flows will tend to be around us, not with us. This is a complicated issue, but the point I want to make is regardless of the hype, the steel tariffs are probably not a really big deal for the rest of the world. They are a big deal for Americans. I'll talk about that next week.
Thanks, John. When we come back, Machinery Pete has this week's Tractor Tales. That's next.
U.S. Farm Report is brought to you by Kubota. Tractors, hay tools, utility vehicles, mowers, and more. Visit KubotaUSA.com today.
Welcome back to Tractor Tales, folks. This week, we're going to tell you about a unique tractor we found on an auction in Ohio. This is a 1938 Huber and was owned by Pete from Ohio. Huber started building tractors in 1898, but moved to construction equipment in 1942.
This is a row crop tractor. These are especially different from the wide front end ones that were more stationary to run thrash machines. These were used more for row crop in the fields. And they made 400 of them. They used a Waukesha motor. They weren't very popular. They're kind of rare. They made more of the stationary tractors, the wider front ends. The row crop, it's pretty unique. Usually the Hubers are green. They painted the row crops gray. So yeah, that's a little bit unique there, being gray. This comes from an auction in Indiana. It usually fires right up. I prefer a battery where you turn the key or push the button and start them, especially on a hot day. It ran when we got it, and we just repainted it for the most part. We didn't do much mechanical. The mechanical work was pretty good on it, and a lot of people enjoyed it at the parades.
Thanks so much. Well, still to come, can safety net changes and the promise of better prices help to grow cotton acres? We'll take a look in our next half hour for our Farm Journal report. And it's part 2 of our marketing discussion from North Dakota. Don't go anywhere.
Your next piece of equipment is on MachineryPete.com. Search equipment from dealerships across the country to find what you're looking for. Only on MachineryPete.com.
Welcome back to U.S. Farm Report. Trusted, timely, tradition.
Well, the cotton industry is seeing a number of changes already in 2018. That includes a ginning assistance and a new safety net for the year. With the changes and prices on the rise in this Farm Journal report, Betsy Gibbon reports on expectations for the new year.
Planting intentions are now turning into decisions for the 2018 season. But some growers had a plan long ago.
Usually plant cotton 2 years, then peanuts, follow them with peanuts 1 year. So we pretty much stay on a rotation. Cotton acres may go up a little bit, but I don't see them going up a whole lot.
Both the U.S. Department of Agriculture and the National Cotton Council expecting climbing cotton acres in 2018.
In this part of Texas, it's been more than 100 days of no precipitation, so that's broken a record.
Something NCC took into consideration for its survey.
Due to the dry conditions in the Southwest, the assumed abandonment rates for Texas and Oklahoma were higher than the recent 5-year average.
Same fundamentals that are driving the wheat story right now should have a little impact on cotton.
Despite dryness, questions are raised about the real size of the 2018 crop.
I think the initial numbers from the USDA and the National Cotton Council were probably on the lower side.
I don't think there's going to be a whole lot more, not this year anyways. I mean, right now, private estimates are putting 13.1, 13.2. That's up about 4% from what we saw last year. So it's not a huge jump. I think it's about 1% increase across Georgia.
Government help may also play a role. Ag Secretary Sonny Perdue announcing earlier in the month the cotton industry will receive marketing assistance payments for the 2016 crop with a ginning cost share program.
This program will provide direct marketing assistance to producers and help alleviate a portion of the economic conditions producers are struggling with. This program will help to fill the safety net void until the Title I seed cotton, ARC, and PLC program is implemented beginning with the 2018 crop year.
Entering Title I may be the biggest aid, now official following months of lobbying.
The two main ticket items are cotton and dairy.
The stacks program, the insurance program in cotton did very well.
We need some type of safety net.
Cotton is now covered by the ARC and PLC programs.
I don't think there's a single person in ag circles that would tell you that cotton and dairy weren't the commodities with the poorest safety net, and so that got resolved.
Farmers have until early May to reallocate generic-based acres. They can choose seed cotton or seed cotton and other covered commodities. Cotton growers need to figure out if they're going to use the ARC formula or two options within the PLC formula to find yield.
Yeah, I feel like we'll probably enroll in PLC. I mean, it gives us a safety net.
If they use the PLC program, growers need to plug in a reference price, a weighted average between lint and seed.
If we look at what that 36.7 cent reference price would have paid out over the last 10 years had the seed cotton program been in place, we would have seen payments in 6 out of the last 10 years.
I think it's fair. I think it's a good safety net, and I think it's a fair price. We haven't met a farmer yet that will rather get their money through government payments than getting it through the market.
But it does make King Cotton more competitive with its rival peanuts, especially with price.
I would say, yeah, right now they should be competitive at the prices they are today.
They're no longer going to be farming for payments for peanuts. They're going to be market prices, and the market price of cotton right now is more competitive than the market price of peanuts.
I think that's where we're going to see that shift in acres, away from some of the peanut acres to some more cotton acres.
My forecast is less than it was. You know, I'd hate to put a number on it. I'd like to think it'd be around 13 million acres. You know, this is up from 9 million just a couple of years back. But again, the bean market we've seen the last couple of weeks has really changed some of my opinion on that. I think that's one reason why we've seen cotton continue to rally.
However, NCC anticipating a 42% acreage jump in Kansas and a 30% jump in Oklahoma due to lower wheat prices and above average cotton yields in 2017.
Arkansas had a bit of an issue last year with storing cottonseed. There was just so much cottonseed and not enough warehouse space. So with the big jumps in acreage in those states, and they haven't historically planted as much cotton, you may see a slower ginning processing time or possibly the lack of storage space for cottonseed.
But Davis is not new to cotton, and that's why he will continue to plant if the market allows it.
We're going to probably want to have all the cotton base we can because we are predominant cotton farmers. That's our biggest acreage here on our farm each and every year is cotton.
Trade uncertainty is weighing on the cotton industry as well. This comes during a time when the president has officially ordered tariffs on imported steel and aluminum products. Some countries, such as China and Turkey, say they may retaliate. Both are big buyers of U.S. cotton. This is all news we should certainly watch. Tyne?
Thanks, Betsy. Well, this week's WSDA report raised exports by 300,000 bales on stronger world demand and expectations of above-average shipments during the second half of the marketing year. That brought ending stocks down by roughly 500,000 bales. Well, we'll head back to North Dakota after the break, and Tommy Grisafi continues our marketing discussion. That's next.
U.S. Farm Report is brought to you by Prosaro Fungicide from Bayer. U.S. Farm Report on the road at the Ag Industry Day is brought to you by CHS Ag Services. Proud to serve you in 20 locations in Northeast North Dakota and Northwest Minnesota. Wishing you a safe and productive planting season.
All right, now it's time for round two of our marketing discussions where the analysts take over. Tommy, take it away.
Welcome back for part two of our U.S. Farm Report here live in Grand Forks, North Dakota at CHS Ag Service Day. We're going to go right back to spring wheat. This crowd wanted to hear more about it. Let's get down to it.
Yeah, you know, we were bringing up the point that spring wheat stocks are down. They have actually decreased the last 3 years. I think it's the only crop we've got in the U.S. that has a bullish situation when you look at individual supply. That's why we had a huge rally in spring wheat last year. Of course, we had a heck of a weather threat in there too. So I'm bullish spring wheat as far as that we don't have a huge carry out to worry about, or I should say a beginning stocks to worry about. Here's a typical broker. I'm going to tell you the other side too, though. I think we're going to plant more spring wheat this year. 1.0 to 1.5 million more acres of spring wheat, I think, goes in. So if we plant more acres, Tommy, I can't get too crazy bullish.
My friends who sell seed, they're my best indicator of, hey, what are you selling? And they're selling a ton of beans, a ton of spring wheat. What's that make the corn picture look like? Maybe that's the story. Maybe it'd be nice to own some corn in North Dakota, Minnesota, Red River Valley.
This is the time of year, right, when analysts are all trying to guess of the acres. But here's my contrary opinion on that. It almost doesn't matter how much corn acres you lose. We just saw ending stocks 2.127 billion bushels. There's no reasonable amount of loss of corn acres that could pull that ending stocks number in 2019 to something that would be suddenly bullish, like a $5 kind of bullish. So sure, you might have less than 90 million acres, but it almost doesn't matter. I think I have a hard time getting bullish from an acreage perspective, even for corn.
Unless, let me play the other side of that. What if I'm right, spring wheat acres gain, soybeans are going to gain acres. I really think so there too. So we're running out of acres. Cotton's going to gain as well. If new crop corn acres are below 90, say there are like 89 million, and say we have a weather scare somewhere in the middle where we think that the yield is 167, you know what our ending stock would drop down to? A 1.375.
That's still enough corn to get by,
It
right?
is. It's enough corn to get by, but it's also enough of a scare to push money into the market and have corn prices struggle.
Let's talk about that. Talk about money in the markets. My background, I traded some stock indice futures. Right. Volatility goes from 10 to 50 in 48 hours. What's that mean to the farmer when they see the Dow Jones break 2,600 points in a couple days?
We are seeing investment money coming into the commodities in general and in crude oil. And for grains, yeah, I think we can benefit from some of that investment money flowing in.
And that's one of the main reasons why I'm bullish in 2018 is money flow. We didn't have any of it last year, if you ask me. The Dow, when it crashed the other day, I think for the first time in 3 years showed that it's not invincible anymore. So now money's looking for a better investment. And when you look at where the Dow's at now compared to where corn prices are at, if you look at like inflation, what a great buy.
Elaine, Dwayne, is volatility good or bad for the farmer in your opinion?
if it's upside volatility, that's good, but I was just going to caution that just because we get investment money coming in, it doesn't necessarily have to be long investment money.
Right.
It could be people coming in and short selling soybeans, seeing that crush or seeing a trend following opportunity. It could be bearish.
Stay with that. We have a couple minutes left. The funds, if we were doing the show a few months ago, the funds would have been almost record short, right? Where are they now?
As far as corn, they've actually gone from record short to a little bit long, and that's why the corn market has rallied.
Soybean meal, I looked at a chart the other day, the funds have added quite a lot of, it's easy to get in, but boy, when they go to get out, I don't know if you want to be on that side.
Right. That's just it, that story, the story about Argentina, that's what drove them into that, and so now what happens that the story is pretty well played out? Hard to say. It could be volatile, like you say.
But I think volatility is a friend if you know how to harness it. 1 minute left. Let's go from my other background, trading bonds at the Chicago Board of Trade. Let's talk about interest rates, something that hadn't moved for 10 years because of quantitative easing, but interest rates are going up. What's that mean to you as a farmer? What's that mean to you as an analyst? What do you tell people?
I think that even the European bankers have come out today saying that they're willing to let interest rates keep rising. That's the expectation from the U.S. central bank. That is the expectation that farmers have to deal with, and it can affect land prices and lots of things.
For me on my farm, what it does is it's back to when I originally started farming. Now Tommy can joke about how old I'm getting, but interest rates matter again now as far as what I'm storing on. You know, if I store corn until August, there's an interest rate cost there of, you know, $0.015.
30 seconds left. Give us something that this room can do that's actionable, that they can say, interest rates are going up, what are you going to do with your corn?
You could sell it and buy it back with a CME product. It would be one thing that I would, you know.
Sounds good to me.
Yeah, it sounds great to every commissions broker, yes.
But they can pay that bank back. I like to be the first one. I tell my clients, be the first one in your banker's office, not the last.
Yeah, absolutely. That's a good point, too. No, you know, what we're getting at with these interest rates is maybe it is better to sell the corn and buy it back, but you need to do something to buy it back. Don't just sell it and forget about it.
And certainly to be mindful of, the interest rates on anything you're borrowing, for sure.
Mm-hmm. And stick to the marketing plan. You know, I'm talking about volatility, how great it is. Run your farm like a business, and like I've heard Tommy say, it's okay to make money.
It's been a fun discussion. I want to thank you so much. Stick around for a little bit more U.S. Farm Report after this break.
U.S. Farm Report is brought to you by Corvus Pre-Emergence Corn Herbicide from Bayer, the only herbicide to offer 3 levels of defense against weeds, burn down, residual, and activation with rain.
Well, saying goodbye is often the hardest part of living. Cowboy poet Baxter Black captures the sentiments beautifully this week from out there.
We have watched the number of people actively involved in production agriculture decline steadily, from 37% in 1900 to 12% in the 50s and to 2% today. You know, I got this ranch from my daddy. He came here after the war. He carved this place out of gristle and blood till every muscle was sore. I took over in the 80s and married my darling in May. And together, we weathered whatever came up. She had what it took to stay. And last winter, we finally decided we'd pack up and leave in the spring. Kids are all grown and city folks now, but we never raised them to cling. Oh, sure, I wish they'd have wanted to ranch and carry it on, but they did their part. And I thank them for that. And they chose. And now all of them's gone. Well, this last 30-odd years, we've collected an amazing number of things. Bonnets and bottles and clippings and letters and Dad's old surcingle rings. We spent the winter months sorting. Our hearts would ache or would jump as we looked at our lives and the trinkets we'd saved, and then boxed up or took to the dump. We cried sometimes in the attic. I'm not ashamed of the truth. I love this old ranch that we're leaving. We gave it the strength of our youth. And I love this old woman beside me. She held me and stayed by my side, and when I told her I was thinking about selling, she said, "Honey, I'm here for the ride." Well, these new fellers moving in Monday are nice, and I wish them good luck, but I'd rather be gone, so Ma, get your stuff. I've already gassed up the truck. And looking back over my shoulder at the mailbox, I guess that I know there's a time to be staying and a time to be going. And I reckon it's time that we go. This is Baxter Black from out there.
Thanks, Baxter. And you can read more and watch Baxter online at baxterblack.com. When we come back, John Phipps has this week's customer support.
Your call is very important to us. Please hold.
In customer support this week, it's not often John Phipps gets to share some of the nuts and bolts of his on-farm battles, but today he's in the weeds. John?
Doug Fox from Austin, Minnesota has a question about how we control weeds. I realize you are away from your farm as you handed the reins over to your son, but as long as I've watched you, I don't think I've ever, well, maybe once, seen you on your farm talking about what you think about when what you see in your part of the country about crop growth and weed control and how it is going. Well, to begin with, like many retired farmers, very little has really changed for me. Aaron and I are still the principal operators. I still live on the farm. I still do pretty much the same work, except for making all the financial decisions and getting the money. The main reason I don't talk in detail about how we are managing our operations is that it implies some expertise on our part. Like most farmers, we're simply doing our best to deal with these issues. What I can share are some guidelines Aaron and I have kind of cobbled together over the last 10 years. First, predictions of more frequent large rain events look accurate. We have invested in drainage to deal with this. Second, our growing season is noticeably longer. We are less concerned now about damaging frost both in spring and fall. This means we plant earlier, especially soybeans, and are trending to slightly longer season hybrids. Third, weed control, which you asked about, over the last few seasons has become the all-out battle it was 25 years ago. Our herbicide budget has tripled in the last 5 years. For us, the main threats are water hemp, giant ragweed, and mare's tail. This challenge shows no sign of diminishing. We are making headway, but I don't think the magic glyphosate days of the late 90s will ever come again. Fourth, we've stopped using below-ground traits in our corn. Now, we know there's a risk. We simply have not seen the returns. Since herbicide costs are already considerable, we grow some non-GMO both for premiums and cost savings. Fifth, we don't see any of these trends shifting rapidly or soon. Now, this is our plan, and it probably won't fit anybody else out there, but you asked.
Thanks, John. And remember, if you have questions or comments for John, just email him at mailbag@usfarmreport.com. But when we come back, the snowpack situation in the West is much different from a year ago. We'll take a look after the break.
U.S. Farm Report is brought to you by Resicor Corn Herbicide, a uniquely powerful formulation, extraordinary power over weeds.
The local weather can have a big impact, not only on your day, but also on your crops. Start your day off right with your local forecast delivered right to your mobile phone. Just text Weather 6 to 31313 to get started.
Well, from the farm to the big stage, it was the World Championship Cheese Contest this week in Madison, Wisconsin. Held every other year, organizers say there are a record number of entries, more than 3,400. Participation is up about 15% from 2016. There are 121 classes of cheese. Now, this is the first year it's been judged at the World Cheese Championships.
Our contest changes just as consumer preferences do. In the marketplace, you're seeing growth in international cheeses, things like paneer.
According to the Wisconsin Milk Marketing Board, the amount of paneer sold nationwide doubled from 2013 to 2017. The competition includes entries from 26 nations. And moving over to our friends from the north, Lawrence from Ontario is making maple. The syrup is boiled to 242 degrees Fahrenheit. Then it's thick enough to put through a candy machine to make sugar. Yum. My husband did that one year. Not a quick process. And back over in a colder area, Dike, Iowa, Ryan Peterson is showing us in a picture what his week was like. Rain, ice, sleet, and snow. Well, California snow surveyors trekked through snow once again in the Sierra Nevada mountains for a fresh snowpack measurement. Recent snows helping the water outlook for the state. The snow measurement at this site now 39% of average. Prior to these storms, it was 7% of average.
Accumulations of somewhere between 8 to 10 inches of snow water equivalent pretty much throughout the range, and that is a huge boost to what we had been seeing back last week before the storms hit.
That 8 to 10 inch water equivalent that he mentioned refers to runoff. The mountain snows historically provide Californians with nearly a third of their water for the whole year. March is typically the last month of the rain and snow season in the state. For all of us at U.S. Farm Report, thank you so much for watching. Be sure to join in next week as we work to build on our tradition. Have a great weekend, everyone.
U.S. Farm Report has